Anyway, hit like 95 degrees, which is strange for this time of year in May in Seattle. Today is 80, and tomorrow, for the next foreseeable future, we'll be back down in the low 70s, which is normal for this time of year. Hope you guys are doing well. Hope the weather's good where you're at. Yeah, because I was talking over it, I didn't understand the words, but what you guys heard was recording in progress. So they just started the recording. I get that, which is great. No problema. All right. Well, let's begin. We're going to have some fun time today. Let's get this set up here for the slides, and we'll be ready to rock and roll. There we go. Okay, so I'm going to switch over and do the screen sharing. It should work. All right, are you seeing my smiley face right there? That's not the, let's see. Well, Darlo, we left San Diego last night at 9 o'clock, and we've been there for 10 days or more. We only saw 80 a couple of days. It was really rather kind of cool. That May gray was horrible. It was overcast, barely even saw the sun once in a while for days. But we love it down there. Oh, SD, South Dakota. Ah, okay, well, that makes more sense. San Diego was like Seattle normally in May. But boy, oh boy, we have fun, guys. The dome is done. Cindy and I lived in it down there. Some of you have been following our little saga. I had more fun. I had an excavator, a little mini excavator in there for a few days. And I built a pond. There's a little stream that runs in the creek down the bottoms, down below the dome. It's all big, full, mature, beautiful. Just these oaks look like they come out of a fantasy movie. It's just this beautiful oak forest with a little stream. And was able to dig a whole bunch of rocks out of the hillside and down under the oaks, dammed up the little stream. And now we've got a beautiful pond down there with water falling over a waterfall. You can sit out on the deck and just listen to it. It's incredible. We had so much fun down there. And living in the dome is awesome. Guys, if you've never been in one for any extended period of time, I've been in them periodically, but not actually living in it. Holy cow, I love it. It's such a cool experience. Brenda, how are you, my dear? All right. So are you guys seeing a full screen, or are you seeing the, I can't tell which screen. Oh, yeah, I can tell. Hang on. Let's do this again. We'll do the sharing again. Screen number 2. That's the one we want right here. All right. So are you seeing the full size screen now? Yes. Yes, yes, yes. All right. Well, let's begin here. Calendar coming up, always full calendar. Thank you, Rob, for an amazing effort in building content for you guys. Awesome, awesome content all the time, constantly working on it. Have to salute the man. You're awesome, Rob. This is a promotion that is worth noting because apparently the time is about up on this. So if you haven't taken advantage of this, you need to. All right, guys, today we're going to start, we're going to talk about charting priorities, and we're going to do some live work. which I'm really looking forward to, and I hope you are too. I want you to be thinking about anything that you're trading, because as we go through this, I want to spend the last half of the class going through examples of the things that I'm showing or talking about. And I'd like to use your trades, your stocks, well, not your specific trades, because we don't do that, but the stocks that you're interested in as far as looking at the charting skills and the charting priorities that we're going to be talking about today. Okay, here we go. So guys, when you look at a chart, and I'm assuming all of you use charting, there are people that trade without charts, and that's just because they trade either a specific index or a group of stocks in a mutual fund or something like that. You don't need a chart for that. You can use other data. But in normal trading that we're talking about, that you guys are engaged in, we look at charts. So what are you looking for? When we look at charts, guys, we're looking for patterns. Why? Because in my humble opinion, which arguably is not very humble, I'm very passionate about certain things, very realistic about things that I don't know, I'll tell you. But the things that I feel confident in, I'm pretty passionate about. So if there's no pattern, there's no trade. You can invest without a pattern, but you don't trade without patterns. In my opinion, you just don't do it. Now, patterns are formed because of price movement that is driven by expectation or a change in expectation. In other words, when prices move, first of all, they're only moving because there's an expectation or there's a change in expectation. Otherwise, the price has no reason to move. There is such a thing as an equilibrium. When there's no wind blowing on the pond, it's dead flat, it's perfectly level. It's when you start throwing rocks in or blowing the wind around that it starts to get choppy. And sometimes you'll find patterns. You know, if the wind blows a certain direction very smoothly, it doesn't change, you'll get a rhythmic pattern. The ocean does it, where the waves come in sets of 7, and you get a beautiful little pattern. That's driven by an outside force. So there's an action and there's a reaction. A lot of times you'll see an action, which is news related when it finally comes out or becomes known. And then you'll see the reaction to that news. You know, what was the reaction? What was the actual market perception? In patterns, however, we deal with what I refer to as surge and retrace. So just follow me on this. A surge is a price movement. It doesn't matter if it's up or down, but it's a movement away from being static. Okay, so it takes off and it moves either up or down, doesn't matter. And then it stops and it retraces, which means it comes back the other direction. Whichever way it went, it retraces back. Now, if it retraces 100%, then you have something that was maybe a dud, an expectation that wasn't met, and everybody comes back and they agree on the original price. When a stock holds still, guys, when a stock holds still and doesn't move very much, that means that you have a balance. You have an equilibrium. That means the buying pressure and the selling pressure are equal. Now, do not get caught up in bulls and bears, because for the most part, the bulls and the bears that influence the market are the same people. They're the same people. They're acting bullish or they're acting bearish, but there's not anybody that goes around with a sign or a group of people that go around, we're bears. Okay, that may be the case today and maybe even for a period of time, but those same people that are quote unquote bears will flip around and act very, very bullish if the circumstances warrant it. So there's not a distinction of bulls and bears. What you have in the marketplace that you see in a chart is buying pressure and selling pressure. When you have an equilibrium, the price doesn't move very much. It just kind of fluctuates in a very tight pattern. You have balance. You have buying pressure and selling pressure that are equal. When you have a differential in buying pressure or selling pressure, the stock will start to move. Okay? If you're going 3 steps forward and 2 steps back, you're making progress. Slow, but you're making progress forward. If you're going 3 steps backwards and 1 step forward, then you're making progress to the downside very quickly, 3 to 1. Okay? but that's because it's out of balance. It's a 3-to-1, not a 1-to-1 or a 3-to-3. Okay, so it doesn't matter if it's ascending or descending, surging and retrace is how we get price movement. And when that surge and retrace begins to be something that you can recognize and anticipate where it might go next, you have a pattern. And I emphasize might, but it's still a pattern. So what is a pattern? It's evidence of deliberate price manipulation. Well, always price manipulation or always deliberate? Well, yes and no. There is a deliberate action that is associated with the price movement, meaning if it is deliberate, it's being manipulated. Very, very much, a very high percentage of stock market movement is manipulated. Okay. Now, what does that mean? Do we have a little green man behind the curtain like the Wizard of Oz? Well, kind of. We may not ever see them, but there are people that do that sort of thing. Evidence of the influence is that certain sectors will move together, or a whole market will move together, or a stock will follow its sector, or it will follow its market. Now, the deliberate price manipulation may be happening in a sector. Whether or not the stocks follow that is up to the traders that follow that stock, and they follow that sector, or they follow that market. But usually there's a driving force, and we sometimes associate it with random news. Okay, fine. There is such a thing as random news. I agree. But for the most part, there are things happening that are being deliberate. And I won't go any farther than that because that opens up a can of worms I don't want to go. And you don't really know, and you don't have to know. When you see a pattern, you can play a pattern. You don't have to know what the news behind it is at all. You can just play the pattern. When you have patterns, you have probabilities and you have predictability. Now, that has got to be couched by the 50-50 rule. If you see something happen the same way 3 out of 5 times, 3 out of 5, no, let's make it easy, 6 out of 10 times. If you see a pattern repeat 6 out of 10 times in a certain situation, 6 out of 10 times, it behaves a certain way. What are your odds that it will happen again the next time? Who can do the math on that? And then I'll give you a second one, see if you can do the math right. What if it happens 8 out of 10 times? So in the same situation, the stock does the same thing 8 out of 10 times. What are the odds that it will do it next time? This is audience participation, guys. Type it in. What's your answer? I already have the right answer. And I have a few others. Okay. It is very difficult to say 60% chance or an 80% chance. The truth is it's 50%. It's a 50-50 chance. Just because it's done it 8 out of 10 times, the fact that it didn't do it 2 out of 10 times means that there's that possibility. What is the possibility that it will be the next time that you will get either the action or the non-action? And the answer is 50-50. You don't know. You don't have any, if it's just done it 6 out of 10 times or 8 out of 10 times, you have no way of knowing that the next one is going to be either the action that you're looking for or the non-action. You always have to go into it 50-50 in your head. Now, if you change the pattern and you say it goes 1, 2, 3 in one direction, and then it skips one. So it does it the same way 3 times, then it skips one. Then it does it the same way 3 times, then it skips one. Then it does it the same way 3 times and skips one. Now, technically, it's still a 50-50 as far as which one, but now you've got a pattern that is going to give you more reliability, more predictability. You still have to plan as if it's a coin toss. But you can plan very, very carefully now and very deliberately as to what you will do if it does this, then I will do that. Okay. But the odds are always 50-50 because you don't know unless it happens 100% of the time. And it has done it for the last year or 2 years. Okay, I'd lean into that punch. But I don't see that. Okay, I never see that. So you're looking at probabilities, but your reality is a 50-50 chance that it'll be the next one. But if there's a pattern, then you can lean and set up your trade based on that if it does what it looks like it's going to do, this is what you'll do. But what if it doesn't? Well, okay, you already knew that it might not, so it's not a big disappointment. See, that's the whole point of it. Okay, patterns tend to go 3 to 5 times. Why? Why? Let's talk about this quickly, because this is an absolute fact. Yes, it's a fact that they tend to go 3 to 5 times. That's not a definitive, it's not a hard number, but it is an observed reality. Why? What's driving the pattern, the first rotation? Well, that surge and retracement that we talked about. A surge is a reaction to some perceived event, a change in expectation. Okay? And so it surges up or down. Sometimes maybe it's tempting to think a surge is up. It's not. It's just a movement. It's a price movement. If it retraces, which it normally does at some point, it'll surge for a while, then it will retrace. It can retrace all the way back, half the way back, a third of the way back, and then take off again. Or it can retrace even farther, more than 100% back. But the fact is that there's a surge and there's a retracement. And that creates your first rotation when you're looking back on a pattern. The second rotation, once it completes another surge and retracement, will determine whether or not you have a pattern that you can start to trade. It takes a second pattern in order for you to develop a trend or a pattern that may be going sideways, either trending up or trending down or going sideways. You have to get one full rotation and at least half of the second rotation completed before you could call it a pattern. So let's say that you have 2 rotations and you can see 2 rotations, say, I see a pattern. The odds are that if you jump in and play this pattern, you may only get 1 trade out of it. If it only does 3 before the pattern breaks down, well, you only get 1 trade. That's an important, really important thing, guys. Now, what could mitigate that? Well, if you look backwards and you saw that it had done that several times, it does 3 rotations and then changes direction. Well, then you go into it expecting I'm going to get 1 trade out of this pattern. But what if it tends to go 4 to 5 times and break down on this particular stock? Well, then by the time, if you get on number 3, you might be able to get 2 or 3 trades out of it. Okay, you just don't know. But you can look backwards and find out if there is a pattern that you can lean on so that your expectations are realistic. Can I get 1 trade, 2 trades, 3 trades out of this trend or this sideways pattern? Well, it depends. What has it done in the past? Okay. The incentive, whatever is driving that rotation, can either be strengthening or it can be continuing. So what I mean by that is that when you, and I'm going to, let's see, right here. When you have something that goes up and goes down, you have nothing. You have a surge and you retracement. You don't have a pattern yet. If it surges up again and posts a higher high and then it starts to come back, now you have a pattern. You've got 2 rotation points on the downside. You've got 2 rotations on the upside. Now you've got a pattern because now you have a target. You have 3 targets, 4 targets. On this particular rotation now, you've got 4 targets. You see, if it follows the pattern, it'll come back here. If it continues in the pattern, it'll come up in here. However, it's possible that it stalls right here, level with this. That's a reference point. That's where it stalled the last time. To follow the pattern, the surge will have to make it all the way up to the top. If it comes down and it breaks through the support line, then your first target would be right here, you see? So once you start to get a pattern developed, you start to get targets, which is great. Now, there is a tendency in rotations that go 3 to 5 times. There's a tendency, it's not automatic, that the first one is the biggest one. This is news, this is excitement. You get reaction A out of the market. It retraces only part way, maybe 50%. It takes off again. And this time B also posts a higher high, but it's not as high as A. We come down, we catch our balance, we come up again, and we falter about right here. Now this is the C wave. It's very common for A, B, and C to get progressively smaller. Why? Well, because each one of these is a big expression of an event or a perception of the traders in the market. It's very hard to duplicate the first effort and to get even bigger action on the third action, or the third effort, the third rotation. Normally, you will see a descending intensity or strengthening. Now, it could go like this: 1, 2, 3. Bottom is holding. Tops are actually getting even higher. It's possible, not very often, very rare. This is your norm. That's your expectation. So from a priority standpoint, charting priority standpoint, anticipate that patterns will typically get a little weaker each time. By the time you get to 3, 4, or 5, usually that's done. Okay, usually it's done. All right. Now, I was drawing and annotating, but I'm not sure that you could see it. Could you see what I was drawing? I'm drawing it on the screen, on the annotating screen, but I can't tell if it's the one that you're seeing. Can you tell me real quick or not? Yes. Okay, good. Whew. All right. Excellent. All right. So when the news or the incentive, the motivation, the sentiment, whatever that's driving the surging, when it runs out of gas, there, when is it going to run out of gas? Well, I don't know. You look backwards. Do your patterns in this stock go 3? Do they go 4? Or they tend to go 5 rotations? The past, I say, is prologue, which means your greatest identifier of what's happening next is what's happened in the past on a particular stock. So you just have to look back and say, what is the pattern? What is my expectation? When does this thing get overplayed where you can't get the stock to drive up or drive down anymore? You know, when does the sentiment, the overall sentiment, change? Okay. Go for it. There we go. All right, let's clear the road, clear the drawings. There we go. So very simply, find the pattern and play it until it breaks. So if you can identify what the pattern is in the past on that particular stock, then if you can find it, then you play it. If there's no pattern, there's no trade. But when you find it, play it until it breaks, and it will break. It will break down. It's just the nature of the beast. Okay. Pattern correlation. This is something I've talked about in the past. Just a reminder, if you're playing a particular stock, make sure you know that if it follows the market or a sector, or if it's non-correlated, if it's a lone wolf. If you're trading something that doesn't follow anybody, then that's great. You can just follow that and you don't have to worry about it. If you're playing something that follows a sector, well, then you have to learn, does this stock follow the rest of the herd, or is it the lead dog? If it's the lead dog, it's kind of a problem because now you're having to really anticipate and jump out in front of this. If you're finding something, if you're following a stock that tends to follow the herd, that's a little easier because then you can use the herd as your indicator. And whatever it does, if your stock tends to follow 1 or 2 days later, that's the ideal. Oh my gosh, that's the bird in the hand. If you find something that follows its sector 1 or 2 days late. Because then whatever the sector does very accurately predicts what your stock will do. Okay. So pattern correlation, another big factor. A couple more, and then we're going to jump into some actual, we're looking at charts on things that you want to take a look at. Past is prologue. I said that when you look backwards, the most recent past trumps anything else. It trumps 2 years ago, 5 years ago, 6 years ago. What has happened in the last 6 months is more important than what happened a year or 2 years ago. So past is prologue when it comes to chart priorities. Baselines and trend lines. Okay, so here's a couple of things that I really want to make sure that you understand. And I'm gonna, let's see, I want to go with blue here. Okay, a baseline is a horizontal line. Okay, you may have a stock that is bouncing along this baseline. It's developing a bottom and a top, support, resistance. Of these two, this one, support, is king. Okay, as long as the stock bounces off support, this can be, that's supposed to be a question mark, plus or minus. It can be higher, lower. This doesn't have to be accurate on the top at all. Stock comes in from the underside, it starts doing this. What's important here is the resistance. Support, it's generally correlated, but it's not adamant. This one, that's the king. That's the big dog right there. So if you are basing above a line or basing below a line, that's your priority. Okay. When you have trend lines, like I said, once you get this right there, you have enough to say, I believe I have a trend. I have 1, 2, 3, 4 points. It takes 4 points for a trend. Okay. Now, if it follows the pattern, we'll come here. If it breaks the pattern, it'll come down here. If it follows the pattern and you get a third rotation, it'll come up here. If it's getting a little weaker, it may falter just before, which would be normal, not make it quite to the top on the third rotation. If it looks like this, now you've got 3, 1, 2, 3 rotations. If it starts up on a fourth and your stock tends to get 3 rotations, not 4 or 5, then what you look for is this to weaken, come back down, and break down right there. That creates another pattern that we know as a wedge pattern, which is the kind of the death knell. It's the signature of a collapsing trend. If you have something coming down, 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 and then it starts to do this, there's your wedge that is threatening to break the downtrend. Same thing on the top. And you get 1, 2, 3 rotations. That's fairly normal. Okay. Darla says, are there a lot that lag like that? Not a lot, but in every sector, Darla, you're going to find that there will be some stocks in every sector that react a little low or a little late. If you can find one in a sector that you like that has a decent pattern, decent movement, you can see the pattern, but it lags the lead dogs in that sector. Those are awesome because it gives you a little bit more lead time on being able to pull that together. Okay. All right. Now we'll go back to the mouse. Couple more slides and then we'll jump into some chalks. Support and resistance. Guys, direction drives the priority. All right, here's what I mean by that. Trend versus compression, box, rectangles, wedges. I was just showing you something a little bit about that. Let's say that we have a resistance level. The stock that comes up here and starts to pound against this resistance level, this is kind of a normal behavior. If it is true resistance, there'll be trouble getting past this point. You'll see repeated efforts. if the bottoms are climbing here, the probability is a break to the upside. You have a strong probability because what you're seeing is that, yes, they're hitting resistance, but the pullbacks are getting smaller, which means there is a building sentiment of, I'm going to do this, I'm going to do this. You just watch. However, and this is so critical, however, pay attention. If it breaks down here, that means that we were pretty sure we could do it, but after getting pounded on the head or beating our head against the ceiling for the third time, it was like, oh my gosh, I'm not going to do this again. I give up. So this becomes an amazingly important pivot point. Is it going to be bullish or bearish, green or red? Well, answer is, I don't know. All I care about is that it is a significant pivot point. That's what I call it. Other people call pivot points other different things, I suppose, but to me, it's a pivot point. It is an inflection point. Something is going to happen there, and whatever it is significant. It is very significant if it breaks down. It's very significant if it breaks up. This wedge is a big compression pattern right here. It's a rectangle, or it's a wedge type of a pattern, and it is happening at resistance. Now, coming up against a resistance point with a strong move to the upside and a tapering wedge like that, so what are the odds it breaks to the upside? Generally, they're good, but on this stock, what are they? I don't know. Look backwards. Look at the origin. Look where it's coming from. What has it done in the past? Has it done this similar reaction up against a resistance level? If yes, what did it do? And if it does this pattern, boom, 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 and then breaks through repeatedly, if that's a normal pattern, well, then it probably will do it again. Okay? This is the whole point of prioritizing your charting, is you don't want to get bogged down in too much detail and looking at too many indicators. What you're looking at is human behavior, guys. That's really all it is. You're looking at human behavior. You're looking at the chart is nothing more than a reflection of the behavior of the people, and unfortunately, more and more, the algorithms that are trading particular stocks. But it's still human nature. Algorithm is programmed. Human nature is programmed as well. Different motivations, but it's still programmed behavior. And so once you can see the pattern, you've got something that you can trade. Just don't lean on it too heavily. Don't trust it more than it deserves. All right, last thing, targeting. I like repetition. I like to set things up that are important and show you 3 or 4 different times how to do it. This is a summary right here. When you have a stock that moves up to a significant point, let's say we've got a trend line up here, and it's trying like this, it wedges up against that. If that breaks to the upside, there is a target. Where is it? I don't know. I can't see it. If it breaks to the downside, there's a target. Where is it? Well, I can tell you this. This is target number 1. What about this one right here? Yeah, it's possible, but that's just a compression. This is T1 right there, target number 1. Where's T2? I don't know. I can't see it. I can't look far enough backwards. That's the point. You got to be able to look backwards far enough. So here's the behavior. Stock comes up and it pulls back and it starts to wedge into this, and you're going, wow, that looks like it's going to break to the upside. What if this is all-time high? ATH, all-time high. Then the answer is, for T1 on the upside, where is it? What's the target? The answer is, I can't look backwards. It's never been this high before. Well, here's the first thing. You're on a trend line. So the very first thing you have to deal with is, if it breaks through the all-time high, look for it to continue to follow that trend. Now, if it takes a lot of effort, which it did, when it moves from here to here, that's a lot of effort. Every other time it's done that, it's pulled back. So if it breaks through, what if it pulls back like this because it's just tired and it's out of gas? Isn't there a probability that it's tired and out of gas here too? But maybe one college try, well, let's go for it one more time and we break through. Yay, everybody's excited. But after they break through, they realize we're exhausted. Well, that pattern may turn around and break down again. If it keeps going, that means this is really strong. So again, it doesn't matter what happens here. That point, that green dot, is a hugely significant point. Whatever happens next is significant. If it follows the pattern, this is huge. Keep playing it until it breaks down. If it peeks its head up here and then goes, well, we did it, but this was everything, we're exhausted. Boom, that's normal. But they've posted a new high, yay. Okay, but the point is, what happens at these major inflection, these major pivot points, is tradable because it's important. Whichever way, up, down, sideways, at an inflection point, you get a potentially very significant trade. Breakouts are looking or heading to somewhere. If you break out into an all-time high, you have a trend line to follow. Okay. If you break down, if you hit an all-time high and break down, you look back to the left and you get targets, multiple targets of where the support might come back in. Okay, but it's going to be heading somewhere. Now, last point, equilibrium again. Guys, equilibrium means buying pressure, selling pressure is equal. Buy equals sell. This kind of behavior, that's price equilibrium. Everybody agrees on the price. This kind of behavior, just a little, very calm, nice uptrend, that's consensus. There's a bullish consensus that's very carefully, I love this because this is not quite as exciting, but this means that the buying and the sellers are agreeing. This is just getting a little bit more bullish and everybody's moving in a nice, cohesive manner, no big surprises. That's great. When the buying pressure get out of whack, you get really wild actions like this. Buying and selling pressure all over the place. Those are hard to trade. Sometimes they're really hard to find patterns. All right. Now, what I want to do is switch over. And I want to take you through everything that we've talked about here as it happens in real time, so to speak. In other words, I want to be able to take you through charts that you want to take a look at. So let me share the screen here and get over here. All right, everybody see a chart now? All right, excellent. Brenda says, can we start with the cues? Absolutely. All right, Brenda, you have specific questions or you want me to just drive the boat? It's your call. Brenda says drive it. Okay, first of all, I need to see more. All right, so I'm looking back a couple of years here. And what I see is on the cues, which is general market reflection, we've had a big collapse rather, since the end of 2021. That's a very nice pattern right there. Double click on it, grab the all right. Hang on a second, hit the wrong button. Come on, undo that. Anyway, we have nice long compression, not collapse rather, on this 1, 2, 3, 4. And so you're seeing in a downside action exactly what I just drew over and over again. This rotation, there's the big one, the first one, there's a second one like unto it. The third one is a little bit weaker, and then the fourth one, and then it breaks. So we have 4 rotations, the weaker one compressing into a wedge, and we get a lower a bottom across here that It starts to compress right in here. This is a wedge pattern. As it trades down, bottoms start getting level, and then we break out. Okay. So when we break out, what are our targets? Well, we've started a little different pattern now with this movement to the upside. There's the first surge on the upside, the surge, there's the retracement. We double bounce on it. We come back up. It's a little weaker, but we come back to the trend line once, twice. So we've had once, twice, three, four, 2 rotations, starting up on a third rotation. We would look over here, Brenda. Okay, that becomes a target, as well as we go to the top of the first rotation, we draw a parallel line. So I project this out into the future here. There's a parallel line. That's the top of the trend. That's a target. We have an intermediate line right through the middle, again, parallel. And you can see that we've got something going on here. So right now, this first surge was followed by a second surge, Brenda, but it's a little weaker. But we get some correlation. 1, 2, pull back to the baseline or to the support line. Bounce on it again, up to the top, pull back again. So if we get a big breakout, this top green line would be your target on the upside, and this would come into play as well. So you're going to have some horizontal correlation up here, and you're going to have the current channel, which is between these 2 green lines. This is what's going to drive it in the short term. Okay, that's what you're in. You've got 1, 2, you're in the top of the third rotation to the upside. Well, let's go look back. Okay, let's look back. Oh, how far back do we have to go here? What we're looking for is on an upside, how many rotations do we have? Well, what I'm seeing is this one lasted for almost 2 years. I can't even see the beginning of that. So that's not going to be too helpful for us right now. Right now, in the short term, this is what we have to deal with. Oh, the color's too light. All right, I will change that. Let's make this dark blue. That's probably always a good color. Save that as a default. My bad. All right, Brenda. So this is your, there we go. I'm just throwing these in real fast because we got to get going. We got lots to cover. There you go. Is that a little helpful? That a little better, Brenda? She said the background is too light. Yeah, well, don't want to spend time doing too much of this. Let's see, back color. Let's give it just a little bit of wrong one. That's the background. I don't do this often enough to remember. Gradient, customize colors from this chart. Background, use gradient. Oh, that's kind of weird. Not sure I want to do that. Well, that gradient was kind of weird. Maybe that's too much. I don't really like this. Let's try that. Whatever. Okay. So I'm going to pull back up here and take another. Let's see, who do we have? Charles said CMG. All right, let's take a look at that. All right, Charles, we're going to look back on this, and we see that if we go to a monthly chart, this is an all-time high. Okay. So what we need to keep in focus right here is we just took out the all-time high. Okay. So now we can zoom in on this a little bit closer. News driven, probably earnings driven. I don't follow this one, so you can tell me, but we have a big gap that pushes up across the line. And now we're starting into what I can see as the beginnings of a little rotation pattern. I'm going to take all these tails because they seem to line up very nicely. And if we take and run a parallel, I like that. So there's your short-term picture, Charles. From a targeting standpoint, any breakdown on this is going to find it's going to find some action right here. It's going to find some action right here, because this is the area that it dug in to find support to stay up there at the all-time high. Because there's a gap, and because there's a big single move across to that all-time high, there is a case to be made that we are potentially short-lived on this. Now, Charles, this could keep going. It tends to be smaller candles and just very rhythmic, very sustained, very deliberate on the movement on this, which is great. But gaps tend to get filled. And so I would say watch very carefully in the future. If there's any breakdowns, these two areas would be particularly important to me to watch. Your third target, obviously, is right here up to the top of the trading range. So short-term trading is all about maintaining this new high, Charles. Can they do it? And that's the jury's out on it. I mean, quite frankly, it's this is pretty gutsy move here to take that big of a jump without going back and filling that gap. If we look back on this particular stock, we can look back and say, all right, there's a gap. Was it filled? Yes, it was filled. Do we have any other big gaps? There's a gap. Was it filled? Eventually it was filled. That one was filled. I'm just looking back. Is there a history of filling gaps? And there absolutely is. So if it follows its historical pattern to fill gaps, then we may see a revisiting to fill this hole back in here. We'll see. Okay, Trip, let's go to Micron. Trip, you've been trading this thing for years and years and years, haven't you? I remember. All right, questions on Micron. Chip, what are we looking for here, bud? Should have Trip do the analysis on this one, because if he hasn't figured it out by now, just kidding. All right, we go back and we find a strong base back here. Big, great big double bottom. What I like is this, because this is a powerful correlation. This goes back to last August, in fact, even really July, so almost a year. So for almost a year, we have been in a compression pattern of a big box, a big rectangle box between 48 and 65 or so. And it has gradually started to push its way into this wedge and finally breaks the pattern. So the resistance level, which is the one that counts on this one because of the breakout now, you can see this compression 1, 2, 3, 4, 5, 6 times it tested resistance. It only tested support twice, and then it started with rising bottoms, rising bottoms. Okay, these don't have to be perfect up here, because this is what's happening is we're testing the resistance line. So these can be plus or minus. They actually are pretty close. Looks really good, actually. And now we've got a break. So what do we have? Well, Trip, what I'm seeing is this. I'm sure you are too. And I would like to point out that we've got another beautiful example of this kind of pattern trading from Micron. Okay, we'll do another one right in here. Okay, and then now, believe it or not, even though it's a wedge, this is, I can't highlight a wedge, so this is not really a rectangle, it's a wedge, but it's the same kind of behavior pattern. This is 1, 2.5 months. This is 1, 2 months. This is 1, 2 months. So 2 to 2.5 months of tight compression is usually followed by a release, which it is. Now we got a movement up here on this today, and the target is obviously up here at about 75 bucks. Okay. Fall back, your baseline on this uptrend correlated with the resistance level. This is your, come on, let's do that again. This is the support level down here to be concerned with. This is the resistance. At this point, it looks like the breakout has got some legs. What we would do is, because it's a wedge compression, we're going to take the top pattern and we're going to lay it up here. Crap, come on. There we go. Come on, move. There we go. There we go. That's what I was looking for right there. Okay. So that's what I see there. But let's see. I'm trading off of the fibs, but I do have an ascending trend line from about 48 forming a triangle. Love seeing your analysis, shows many of the same opportunities as using the fibs. Yeah, and you know, Rob and I go back on this. We've always been, we tease each other that I don't think we've ever had any big disagreement, but whatever he shows up on the fibs, I can show it in a chart pattern. I just gravitate to this. This is the way I like to look at it. But it's like, you know, two different ways of looking at the same thing. Okay. Let's see, what else we got here? I'm looking back for other. We had CMG, SPY, and Apple. Who else? Guys, throw something else out here. We got a few more minutes. Who else has got another? Okay, Darlo, sorry. All right, what do we see? Well, the first thing I see is a great big wedge right here. I see historical. It doesn't want to lay down completely flat. There we go. Nice. Come on. There we go. I think I captured it this time. There you go. Having trouble with that. Okay, we have a nice big descending pattern right here. We're on our parallel line. Again, on a descending pattern, they don't have to follow the bottom line perfectly. It's just a reference point. The top one is the one that's important. Now we break out. We have a nice rectangle compression there. I'm deliberately leaving that top out of this. I'm leaving the top out. Why? Because we have a lot of correlation here on the top of the box and the bottom of the box. There's the price action. There's a gap, and it traded right back in and kept it. Okay. What was important was when it broke out. Now that it's broke out, we look to the left, Darlo, and we see next target. Turkey, why did you do that? Try that again. Booyah. Okay, so Did we recognize the previous failed rally attempt? Yes, we did. Hit it, pulled back, jumped across, came back and landed on it once, twice, 3, 4, 5, 6, 7, 8. So this is definitely establishing a wedge. We've definitely got compression, very tight compression right in here. Now, Darlo, if it breaks out of that, you keep stacking. You look to the left for your targets. There's the upside target. We look at the big picture, and the big picture is right here. 1, 2. Left click on that mouse and it just does not like it. Quit doing that. There you go. And one more. Okay. Now, is this established yet? And the answer is no, not yet. But I would have this in the big picture. Okay. We ran a real tight, real vertical run right here. This was very steep, very aggressive. We got 1, 2, and a third explosive action right back to the base, and now we're compressing. So this wood was a big blowout. Expended a lot of energy on this, and now it's just compressing down into here. Very significant what happens next. Target. On the downside, breakdown is going to be right back here to $10. Big important thing. You lose that, you could drop all the way down to 5, all the way down to 3. Push to the upside, your targets are 14 and then on up to the 16, 17 range, depending on how it goes. But right now, this compression most likely trades back closer to 10.5 bucks, and then it'll either going to break down or it's going to break up. Okay. Is that helpful? Darla says, following crypto, good for you. I don't. I don't. Jennifer says, electric vehicle company, I drive. Let's try this, IDRV. And we're actually out of time right now, but we'll take a look at this real quick for you. All right, so what I'm seeing, Jennifer, is we're going to start right here on this recovery process. Boom, right there. I'm going to slide this guy up to here. Okay, is that still in play? Maybe. The support line is still there. We do have a collapse. We have a wedge formed down right through here. But that wedge failed to break the support. We have 1, 2, 3 lines on here, 3 hits. So that's dominant. This is the control point right now. Now we're trading out a little bit of a compression here into another wedge. We've got this, and this is just going to get a little static, a little range bound right in here. So you just use this top blue line, the bottom blue line. That's your trading for the next week or two until it breaks out of that. If we break to the upside, your target is back up here to the top, which will be in line with the failed rally. Okay, a lot of reason for it to move up and test 43 again. Watch this bottom line. If you drop down through 36, boom, you look backwards and you've got a 32.80 and you've got a 31.80 as total lower targets. Okay, but that's the way I would look at this. That's the way I would chart this out. And that's what's going on. There's your targets. There's the existing pattern. There's your existing targets down below if it breaks down. All right. He said, Riot is a blockchain company that mines crypto. Well, fun and fascinating world. I know just about enough of it to be dangerous and watch it from a distance right now. So, all right, take care, guys. God bless. Have yourself a great day on a Friday. Have a great weekend because we have a holiday weekend, and we'll see you when we see you. Take care. God bless. Bye-bye.